While most traders panic over every tick, a forgotten system quietly beats them year after year. In 2025, it's not the fastest that win, it's the most disciplined. The turtle strategy isn't just a backtest fantasy. It's a psychological weapon. If you can follow rules better than your emotions, this might be your edge. Day traders react. Swing traders anticipate. But the turtle system? It waits, confirms, and punishes those who flinch. The reason most traders fail in 2025 isn't lack of setups, it's lack of structure. Emotional trades, FOMO scalps, revenge entries. That's what this strategy eliminates. While most traders in 2025 are obsessing over the next meme stock breakout, the next news event, or the next AI pump, there's a group of traders quietly beating them, all by doing almost nothing. They don't chase candles. They don't scalp for crumbs. They follow rules. Old rules. Brutal rules. Rules that were designed not to make you feel smart, but to make you rich. This is the turtle strategy, an emotionless machine that still works when everything else fails. You've probably heard it mentioned in passing. Maybe you scrolled past it. Maybe you ignored it. Why? Because it's not sexy. It's not flashy. It doesn't offer dopamine hits. It demands something far more rare: discipline. In the early 1980s, Richard Dennis, a trading legend, had a theory: trading success wasn't a gift. It wasn't luck. Could be taught. To test it, he recruited ordinary people with no trading experience. He trained them for 2 weeks. He handed them a mechanical strategy. And then he gave them real money. These people became known as the Turtles. They went on to generate over $100 million in profits using a system so simple it could fit on a single sheet of paper. They didn't predict. They didn't guess. They obeyed. Fast forward to 2025. The market is noise. Traders are addicted to volatility. Everyone is chasing alpha, liquidity, leverage, and illusions. Day traders overtrade. Swing traders panic. Social media floods the timeline with false confidence and delusion. But the turtle trader is still waiting. Silent, cold, ready. The turtle strategy doesn't care about trend lines, fancy indicators, or breaking news. It's built on one idea. When the market breaks out, ride it. When it doesn't, do nothing. Most traders fail because they always want to be in a trade. The turtle strategy waits for the perfect storm. And when that breakout hits, it enters with precision. It sizes with control. It exits with logic. No emotions. No instincts. No hope. Just rules. And that's why it works. It doesn't rely on talent. It doesn't care if you're new or experienced. It only asks one thing. Can you follow orders? The average trader wants to be a hero. The turtle wants to survive. The average trader wants dopamine. The turtle wants data. The average trader wants to be right. The turtle wants to win. In a world where everyone is trying to outsmart the market, the turtle outlasts it. You won't find this system hyped on TikTok. It won't trend on Reddit. It's not driven by emotion. It's driven by execution. Most traders hate structure. That's why they lose. The turtle strategy forces structure. It removes the illusion of control and replaces it with clarity. It doesn't ask for your opinion. It asks for your discipline. And here's the irony. The turtle rules have been public for decades. You can search them right now. You can find them in books, blogs, forums. And still, almost no one uses them. Not because they're hidden, because they're hard. Not hard to understand, hard to obey. It's not a knowledge problem. It's a discipline problem. This strategy punishes overconfidence. It rewards consistency, kills noise, thrives in trends. And it's designed to protect you when the market turns against you. It doesn't need speed. It needs patience. It doesn't need prediction. It needs reaction. It doesn't need ego. It needs obedience. If you're tired of losses, of emotional breakdowns, of overtrading, of the constant spiral of panic and regret, this system is your answer. Not because it guarantees profits, but because it guarantees discipline. And discipline is what every profitable trader has. The strategy is old, but the edge is timeless. While the world gets louder, the turtle gets quieter. While others rush in, the turtle waits. And when the time comes, it strikes with calm conviction. This isn't a trend-following method. It's a mindset, a transformation, a total rejection of emotional trading. You don't need a better entry. You need a better system. You don't need more trades. You need fewer, smarter ones. You don't need hope. You need rules. The turtle strategy is not a secret. It's a test. Most fail. Some pass. Which one will you be? The turtle strategy is not magic. It's a machine. Built on clear, ruthless rules that eliminate emotion and crush inconsistency. Most traders lose not because they don't know enough, but because they know too much and obey nothing. The turtle strategy doesn't care what you think. It only cares if you execute. Here's how it works, and why it still beats modern markets in 2025. At its core, the strategy is built around one simple idea: trend following through breakouts. That's it. You don't predict where the market will go. You wait until it shows its hand, and then you ride that move like a machine. If nothing happens, you do nothing. If a breakout triggers, you enter with cold precision. The entry rule is brutal in its simplicity. Buy when the price breaks above the high of the last 20 days. Go short when it breaks below the low of the last 20 days. Why 20? Because 20 days filters out all the noise, all the sideways confusion, all the manipulation. If something breaks through a 20-day barrier, it means momentum is real. It means something big is moving. Most traders want to buy the bottom. The turtle doesn't care about the bottom. Cares about movement, strength, and confirmation. No guessing. Just waiting. When the price pushes above the 20-day high, the turtle reacts. That's all. Stop loss? Set it at the 10-day low after entry. If you're long and price collapses below that short-term support, you're out. No questions. No panic. No praying. Just out. If you're short and price moves above the 10-day high, you're out. This is protection. This is the armor. It's what keeps turtle traders alive while emotional traders die in the fire. And here's where the real edge comes in: position sizing. The turtle strategy never risks more than 1 to 2% of total capital per trade. That means if you're wrong, and you will be wrong, you bleed small. But when you're right, you bleed the market instead. Imagine this: most traders throw in their entire account on a single high conviction trade and get wiped out. The turtle? It risks a slice. If the market agrees, it scales in. This is called pyramiding. Every time the price moves in the turtle's favor by half an ATR, average true range, the turtle adds another position, up to 4 total units. What's the point? Momentum feeds itself. If the breakout is real, it won't move just 1%. It'll move 10%, 20%, or more. The turtle doesn't try to catch the entire move at once. It stacks positions as proof builds. The market rewards conviction backed by evidence, not emotion. And then comes the exit. This is where most traders fail. They either hold too long or sell too early. Not the turtle. The turtle exits when the trend breaks down. That means exit if price crosses below the 10-day low. Not when you feel scared. Not when you hit a random number. Only when the system tells you it's over. Let's break it down again. Turtle strategy in modern terms. Entry: break of 20-day high/low. Stop loss: 10-day low/high. Position size: risk 1 to 2% max. Pyramiding: add every 0. 5 ATR up to 4 units. Exit: 10-day low for longs, 10-day high for shorts. Simple? Yes. Easy? Not at all. Because most traders fail not on logic but on emotion. In 2025, this system works better than ever. Why? Because retail traders are more emotional, more impulsive, and more addicted to noise than ever before. They jump into trades based on fear, hype, or revenge. They ignore risk. They hold garbage. They exit too early. They blow up. The turtle doesn't even notice them. While they're fighting the screen, the turtle is waiting for a real move. This isn't a high-frequency strategy. It's not for traders who need action every 10 minutes. This is for traders who want to win. Consistently, methodically, without drama. And the beauty is you can apply this system across any asset in 2025. Crypto, stocks, forex, index futures. If the asset trends, the turtle system applies. You can automate alerts, run screeners, set your stop-loss levels mechanically, backtest every setup. Refine your universe of instruments. Most traders chase profits. The turtle chases structure. And that's the difference. This strategy doesn't care about perfection. Cares about execution. It doesn't care if you're late. Cares if the move is real. It doesn't care how you feel. Cares what the price does. That's why the turtle strategy still works. Not because it's perfect, but because it's perfectly designed to eliminate the one thing that ruins most traders, your emotions. Most traders in 2025 lose for one reason: they can't stop themselves. They know how to trade. They've watched the videos. They've read the books. But when it matters most, they panic. They chase. They overtrade. They flip direction 5 times a day. The turtle strategy doesn't play that game. It isn't just a system, it's a psychological weapon. And when you put it up against day traders and swing traders today, it doesn't just survive, it destroys them. Let's start with the day trader. He's glued to the screen. He's looking for that one perfect setup, that one candle, that one breakout. His heart is racing, his eyes are bloodshot, his fingers on the trigger. Every move feels personal. He enters, price moves against him, he cuts. It rebounds, he chases. He's emotional. He's exhausted. And worst of all, he thinks he's trading the chart. But really, the chart is trading him. Now look at the turtle. He doesn't care about the 5-minute chart. He's not reacting to noise. He's tracking structure. He watches the daily. He waits for confirmation. He enters only when a true breakout occurs. And if it doesn't happen, he does nothing. For hours. For days. Sometimes for weeks. The turtle doesn't need activity. The turtle needs clarity. The difference? Day traders drown in data. Turtle traders drown out the noise. Swing traders think they're safer. They think holding for 2 or 3 days makes them smarter than the day traders. But most swing traders in 2025 are just slow-motion gamblers. They still chase news. They still trade with bias. They hold based on hope. They ignore exits. They get stopped out because they refuse to follow structure. They're not swing traders, they're emotional investors with tighter time frames. The turtle beats them too. Why? Because the turtle has no ego. The turtle doesn't care about being early. The turtle doesn't care about missing a move. The turtle only enters when a breakout confirms and exits only when the trend proves it's done.
No predictions.
No gut calls. Just obedience. Here's the psychological advantage that breaks the game open. Turtle traders accept that they will never catch the bottom. They never try. They don't need to, because catching 70% of a big trend is better than catching 100% of noise. Now compare that to the average trader in 2025. He buys early. He gets a small move. He exits too soon. Then it runs and he gets mad. He jumps back in, pulls back. He stops out. He's emotionally shattered. And the trend? The trend goes on without him. The turtle doesn't chase candles. The turtle rides waves. Let's talk about execution. Day traders live in panic mode. Every minute matters. Every tick feels like a test. It's reactive trading. But the turtle? He places a trade after a breakout. He sizes it. He sets the stop. He adds if the market proves him right. And then he leaves it. No micromanaging. No hovering. He lets the system play out. Because the turtle knows the truth. More screen time does not mean more control. In fact, it usually means more destruction. You want to know why most traders lose in 2025? It's not because they're dumb. It's because they can't sit still. They can't do nothing. They can't wait. But the turtle can. That's why it works. The turtle strategy doesn't punish impatience. It removes it. It doesn't expose fear. It deletes it. It doesn't require perfection. It replaces it with precision. Turtle traders don't care if the market breaks out today or next month. They wait. When the signal comes, they strike. And if it fails, they cut. Fast. Small. Controlled. Because that's the edge. Not in the setup. Not in the signal. But in the execution under pressure. You can't panic when your system makes the decisions. You can't revenge trade when the entry rules are fixed. You can't overtrade when the strategy tells you, not yet. That's why the turtle strategy still works, because it's not vulnerable to your mood. It doesn't care if you had a bad day. It doesn't care if you're bored. It doesn't care if you feel like trading. And that's what makes it dangerous, because while everyone else is caught in an emotional spiral, the turtle is simply waiting to strike.
No noise. No guesswork. No rules.
Just rules. Just structure. Just results. That's why the turtle strategy doesn't just beat day and swing traders, it leaves them behind. So how do you actually execute the turtle strategy in the real world, today in 2025? Without second-guessing yourself, without overthinking, without falling back into chaos? You start by building your environment around the system. Because this isn't just a set of rules, it's a lifestyle. The turtle strategy thrives in a structure where you don't need to improvise, predict, or react emotionally. You need a system that makes decisions for you before the market tempts you to screw it up. Start here, build your universe. Choose a basket of 10 to 30 instruments, stocks, indices, crypto, forex. It doesn't matter what the asset is, as long as it trends. You don't need to monitor 200 symbols. You need quality, assets that obey structure, ones that break out and follow through. Filter them based on volume, volatility, and clarity. Next, set your signals. Every day, scan for 20-day breakouts. If the price breaks above the highest high of the last 20 days, you prepare. Not predict. Prepare. Mark the breakout level. Place an alert. Wait.
No alert?
No trade. It's binary. If it breaks, you act. If it doesn't, you don't. That's it. Position sizing comes next. This is where most traders fail. The turtle never bets big. It never goes all in. Every trade is measured. Risk only 1% to 2% of your account per trade. Use the average true range ATR to set your position size. The bigger the volatility, the smaller the size. You're adapting to market conditions, not gambling against them. Stop loss? 10-day low. This is your kill switch. If you're long and price falls below the 10-day low, get out. No questions.
No hesitation.
You're not in the business of hope. You're in the business of survival. And survival comes from obeying stops, not resisting them. Now the power move, pyramiding. Once your trade moves in your favor by half an ATR, you add. You scale into your winners, not your losers. Most traders do the opposite. They average down, trying to fix a bad decision. The turtle averages up, only when the market proves it's working. You can pyramid up to 4 times, increasing size with momentum. The exit? Clean, ruthless, logical. If you're long, and price breaks below the 10-day low, you're done. If you're short and it breaks above the 10-day high, you're out. No debating, no gut calls. Just follow the rule. You don't marry a trade. You execute a system. And in between all this, you do nothing. That's the part people hate. The turtle strategy demands that you sit, wait, observe, and not act until the system says so. Most traders lose because they think activity equals progress. But real power comes from restraint. A turtle trader might place 2 or 3 trades a month. But those trades are clean. They're structured. They're risk-controlled. And when they run big. Because trends don't die in one day. They build. They move. They grow. And if you're riding them with structure, you win. Here's how your typical turtle workflow should look. Morning, scan your universe. Set breakout alerts. Midday, check alerts. Measure volatility, ATR. Prepare potential position size. Entry triggered, execute instantly.
No emotion.
In trade, set stop. Set pyramid levels. Market closes. Log every detail in your trading journal. Emotions, logic, outcome. And then walk away.
No obsessing. Not wicking.
No, just checking. Let the system work. Because the moment you interfere, the edge dies. And that's the core truth of this strategy. The less you do, the better it performs. This system works because it forces you to trust a process. It removes the parts of trading that destroy most people, the second-guessing, the over-leveraging, the need to always be doing something. You want to win in 2025? Forget speed. Forget prediction. Forget playing hero. Trade like a machine. Let the structure guide your decisions. Let the market come to you. And when it does, be ready, be precise, and be absolutely ruthless in execution. That's how you master the turtle strategy. And if you're ready to stop guessing and start executing like a professional, hit that like button and subscribe to Elite Trading Psychology. We're not here to sell hype, we're here to build traders who actually win. See you in the next one.